A company just recorded its best quarter in history. Profit up 19 times. This is more money than it's made in the last quarter than it's made in 3 years combined. And the stock got crushed. That's not a typo. That is the single most important lesson in the market today. And if you're trading AI, chips, or honestly anything right now, you need to understand why that happened, because it is the whole story of this session. Chips got torched. Oil ripped higher on an attack near the Strait of Hormuz. NATO handed out billions in defense contracts. And tomorrow at 2 p.m., the Fed drops a document that could move every chart on your screen. So let's get into it. So here's the whole day in one sentence. The AI trade got a reality check, but the rest of the market shrugged it off. See the split? The gap between the Nasdaq and the Dow, that is the entire trade today. This is not a sky is falling day, it's a rotation day. Money didn't leave the market, it just fired the crowded winners and went shopping somewhere else. Now stick with me, because I'm going to show you exactly where it went and whether you should follow it. The semiconductor index fell about 4.5%, a 4-week low, and 2 names took the worst of it. Intel down nearly 8% and Micron about 7%, 2 of the worst performers in the S&P 500 today. So what broke? 2 things hit at once. Number 1, Samsung. Profit up 19-fold, yet the company still sank today. Why? Because expectations were still higher than reality. When a stock has already run up 80% in the last 6 months, amazing just doesn't cut it. You need perfect. And perfect is almost impossible to deliver. Number 2, DeepSeek. Reuters reported the Chinese startup is building its own AI chip, specifically for interface, a part where a trained model actually answers you. But here's the detail almost nobody's telling you. NVIDIA actually clawed most of it back and was almost green by this afternoon. The most important chip stock was actually telling you that the panic might have been overdone. Quick gut check before we move on. If you're getting any value out of this video, make sure to hit the like and the subscribe button. It really helps this channel and I appreciate it a lot. Now let's get back into it. Okay, chips got hit, but where did the money go? Because most of the market was actually up today. Despite the tech bloodbath, most S&P 500 companies finished higher. The Dow spent the morning at fresh intraday records, and that tells you money rotated into 3 places. 1, energy. And this brings us to the scary part of the day. Iran attacked Qatari tanker near the Strait of Hormuz, the choke point that moves about 20% of the world's oil supply. Crude jumped, WTI up nearly 3%, back around $70, and Brent near 74. So why does this matter beyond today? Because that interim peace deal between the United States and Iran, this attack today just reminded everybody how fragile it really is. And rising oil is not just an energy shock story, it's an inflation story. And hold that thought, because it's going to come back to bite in about 5 minutes. 2, defense. The NATO summit kicked off in Turkey and members started signing deals worth, and I'm quoting the Secretary General here, literally billions. Northrop Grumman is in the line for 5 high-altitude drones, $40 billion earmarked for counter-drone tech. SAAB jumped 5% in Stockholm on surveillance, aircraft deal, and the US is setting up a F-35 maintenance hub in Turkey, good for Lockheed Martin. 3, defenses. Boring, beautiful healthcare, and consumer names quietly held up the Dow as tech burned. That's rotation out of crowded AI names into geopolitics and safety. Now let's rapid fire with the movers here, because some of them are wild. Crinetics Pharmaceuticals, up 99%, nearly doubled. Vertex is buying them for $10 billion. That's your reminder that in biotech, one phone call can change your whole year. Now Rivian, down double digits, self-inflicted. They announced a 75 million share offering. That's dilution, and the market hates dilution. Down 10+% after being up 19% in the last week. A brutal round trip. Fiserv, up 3.5%. Reports that it's in talks to sell its debit card network to big banks. This stock is almost down 70% over the last year, so bargain hunters are circling. Amazon is raising at least $25 billion in bonds, and that number matters more than it looks. We'll unpack why and risk, and SpaceX officially joined the Nasdaq 100 today, still soft as the index flows sort themselves out. Now step back with me for a second, because there's a bigger question on why chips sold off today. The 4 biggest cloud companies just raised their 2026 AI spend to $750 billion. And next year, that crosses $1 trillion. And by 2030, one estimate puts global AI spending data centers at $7 trillion. So demand is not the problem. Nobody's cutting AI budgets. The problem is 2 other things. First, valuation. When chips are up 80% in the last half year, the bar to keep going higher gets brutal. And second, this is the one to watch, how it's all being paid for. Remember Amazon's $25 billion bond sale? That's AI infrastructure being funded with debt. And as long as the returns show up, fine. But that's a lot of borrowed money riding off a payoff that is still theoretical. Now that's the real tension in this market. Not is AI real? It clearly is. Is it priced right? And who's holding the bill? Now let's connect it all with the thing that actually controls the tide, which is the Fed. Rates are sitting at 3.5 to 3.75%. The Fed held there in June, but here's what got traders uneasy. The market is now pricing in real odds of a rate hike by December, not a cut, a hike. Now, why does that matter after an oil-driven day? Because higher oil means higher inflation, and higher inflation means Fed raises rates. The tanker attack this morning isn't just an oil story, it's actually a Fed story as well. And tomorrow we get the receipts. At 2 p.m. Eastern, the Fed releases the minutes from Fed Chair Kevin Warsh. This is Kevin Warsh's first meeting and our look at how the Fed, the new Fed, thinks. If those minutes read hawkish, tough on inflation, yields jump, and stocks can wobble instantly. And if they read balance, today's chip sell-off might just be a buying opportunity. Now let's talk about Bitcoin and crypto. The trade here is simple. If Bitcoin holds 60,000, the buyers here are still defending. If it loses 60,000 and doesn't gain it back very fast, stop losses can start to be triggered and trend traders can start driving the price lower. Now here's a part the other channels skip. The risks hiding in plain sight. Risk 1, the Hormuz CPI collusion. If we get another tanker incident and oil is already elevated, that ties the Fed's hands. 2, the Korea contingent. If that unwind gets disorderly, it feeds straight back into the US chips. And today was a taste of that. Now risk 3, the debt-funded AI build. We covered it. If credit spreads widen, that $750 billion party gets expensive fast. None of these are the sky is falling. These are tripwires, so know where they are so you don't get caught off guard. Now let me give you both sides straight because you're smart enough to make your own call here. The bull case. Breadth is excellent. Most stocks rose even on a chip rout day. Q2 earnings growth is tracking around 23%. AI spending is going up, not down. And weak June jobs, only 57,000 added, actually caps the risk of aggressive Fed hikes. Rotation like today or how healthy bull markets breathe. Now the bear case. The entire 2026 rally leaned on chips, and chips just proved that even record earnings can trigger selling. That's exhausted positioning. The Fed's risk is one-sided. Possible hikes, no cuts. China's building its own chips, and that AI boom is increasingly running on borrowed money. Both are real. Your job is not to pick a side. It's to know and identify the signals that would tip the odds one way or another. And the biggest signal is coming tomorrow at 2. Now here's exactly what I'm watching. NVIDIA. It held up better than every other chip today. If it stabilizes, the whole route probably fades. It's the tell. Now Micron, highest beta, reads on AI sentiment, and it's got a famous short seller betting against it. Pure emotion gauge. And defensive names, Northrop, Lockheed, as NATO's second day rolls out more contracts and Trump holds a press conference. PepsiCo Thursday, Delta Friday, earnings season officially kicks off. The first real look at the consumer. And the key levels, S&P 7,500, it's today's battleground. The Dow 53,000, It's the record pivot. WTI $70, Bitcoin $60,000. Tape those to your monitor. So here's what matters the most going into tomorrow. Today proved that the market can still take a 5% punch to its biggest sector and still stay standing because money rotated instead of running. That is strength, but it's balanced on a knife's edge. And tomorrow's Fed minutes are the knife. Hawkish plus rising oil, and that cushion gets tested. Balanced, and today was just a dip in an intact uptrend. Watch NVIDIA for the answer. Keep some cash ready for the CPI and banks earning collision on the 14th. And do not chase. Now guys, if this helped you make sense of this messy day, again, make sure to like and subscribe. It helps the channel as I'm just recently starting out. I appreciate it a lot, and God bless you guys in the name of Jesus.